Welcome to the New York Outlook for Monday, the 22nd of January 2024. As usual, we'll start off with the economic calendar, although there's not much to report here because, well, there's no economic news releases for today, so that's pretty good forward trading. There's nothing to consider in that regard. Then moving on to the 4-hour, what we can see is that we reacted from this pro-trend unconfirmed 4HOB. We came down taking out a bunch of liquidity in this leg, then reacted from this pro trend previously confirmed primary OB on the 4H, and then we've been moving up since then. The problem with this situation is that the substructure high wasn't validated, so we couldn't actually take any long base trades because the target was essentially unvalidated, which means our primary premise remains to short for today, at least until the 4 p.m. candle closure. Well, what I mean is the 4H candle closure, which is 4 p.m. my time. But by the looks of it, it looks like we're actually going to take out this high, and then we can consider trading or creating a new primary leg to then short from. However, as it stands, there's a number of considerations to take into account, so I'll move on to the 5-minute. The reason why I'm not looking at the 15-minute is because there's a lot of intricacies to pay attention to, because there's essentially reasons to trade both directions, and the fact that we need to consider that we're reacting from 4HOB supporting both longs and shorts. Having said all of that, I just want to recap over the London session. Essentially, coming into the London session, we only had reasons to short. However, as you can see, price didn't retrace significantly to tap into this short position before first reacting to this 4HOB. So once we reacted to this 4HOB, then we had a new secondary leg develop, which then invalidated this primary leg. While this primary leg's OB remains valid, we did need to actually validate a new secondary leg, but as you can see, that didn't actually pan out, and now we're moving to the upside. As it stands, it looks like we're actually going to take out the current high of the day and put in a new high of the day. If that is the case, and New York puts in a new high of the day, then we run into the issue of the fact that New York putting in a high of the day is more than likely an indication for a bullish closing day, unless we have red folder news. As I said, the economic calendar for today is quite blank, so a New York high of the day won't have any validity for shorting, and that will probably mark the end of our trading day. Like I said, longs were not valid because we don't have void substructure to target, and thus we just have to wait patiently. Then, I guess, moving on to the New York outlook specifically, what am I looking for to short? So provided that London actually puts in the new high of the day and we break the London range, so this is currently my London range, but obviously I will extend it, so I'll need, let's assume London puts in this high of the day and then New York opens, then I'd need New York to just to wick this level to say, okay, we took the London liquidity, and then create this new primary leg to then short this way. Like I said, whilst longs are valid, this reaction essentially achieved its objective by taking out this high. While the substructure isn't necessarily valid, it's the only way to justify that, you know, this leg has completed its move. So from a technical analysis point of view, it makes sense to consider the fact that this move has completed, and now that that move has completed, there's only reasons to short, and if we can validate that New York hasn't created a new high of the day, then we've got this primary leg to trade off, and we can essentially consider shorts like that, and then target this as IRL to then consider longs again from tomorrow. If we consider our daily range, which is roughly 80 pips as it stands for January, there's more than enough space for price to come to the downside, or of course continue to the upside. So I guess what I'm getting at is my bias for today is primarily to short, at least until we can validate this for its substructure, but by the looks of it, it's probably going to be used up by the time we get validation for long. So having said that, my bias is short, and I explained just now what I will be looking for to consider shorting during the New York session. Other than that, I think just to conclude, we're in uncertain times, as I mentioned, because the 4H market structure is undergoing potentially a phase change or a liquidity grab. We don't know, which is why I need my three rule set to be met, which is substructure, 4H OB backing, and IRL. For longs, we don't have those conditions met, at least not right now, so that's why shorts are what makes sense to me at the moment. Just quickly glancing at the daily, what we can see is Friday actually closed bearish, so there's no daily bias to be concerned of at the moment. That's pretty much my New York outlook, and we'll chat again for the end of day review.